Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 41.5 to 43.5 as an important support area, and for the most part, ES held above that zone, and from there we got a upside breakout, which seems to be on news out of Greece. And at this point, heading into the open, we're going to watch and see whether that breakout actually has some strength behind it, or some sustained strength behind it. Because if so, then we can definitely go up and test 65 to 67. Test Friday's high at 2068. And if this is a very strong breakout, then ideally we should see the market hold above 50 half to 51 half. Below that, we have the initial support zone at 46 quarter, 48 quarter. So in the event that the market pulls back and breaks below 50 half to 51 half, that would be a warning sign, and it could signal a failed breakout attempt. It doesn't mean that it has to necessarily fail. At that point, we'll look over at the market internals to see if there is some broad market strength behind this move. But breaking 50 half to 51 half would at least be a bit of a warning sign and should put us on alert that this could be a failed breakout attempt. And then if we break below 46 quarter to 48 quarter, that would essentially confirm that the overnight upside move is completely invalidated, and now we could just be back into more of a balanced type market, or it could even result in some continued selling. So that's something we'll have to gauge in real time. But in the short term here, holding above 50 half to 51 half leaves buyers in firm control, and the upside objective is 65 to 67, and Friday's high at 2068, and then that's really the key inflection point on the upside. So as the market pushes up into 65, 67, and 68, this is still an area where there is potential for failure and for responsive sellers to still be active. Now, since it would be second test, it is a bit riskier on the short side, but this is valid resistance until broken. So at the very minimum, if the buyers are really continuing to be active and we spot a long setup targeting 65, 67, unless there are major signs indicating that this could be a bigger move, so that would be via a sustained positive NYC tick reading, or just very strong market internals with the advanced decline just continually rising and showing a lot of strength even in absolute terms. So something like a positive 1500, 1600 AD line, which is still getting stronger, then that would support the idea that we can go even beyond 2068. But if there are not any major signs of strength, and the AD is more of a balanced type AD, which is typically around plus 1000, plus 1200, the tick is relatively balanced, then it's a good idea to exit longs at 65 to 67, and from there the market can just balance in a range. On the downside, like I said, a break below 46 quarter, 48 quarter would invalidate the overnight breakout attempt, and from there we can quite easily pull back down towards 41 half, 43 half. That's a small pocket of support here. Buyers can still be active there because then the market may just be range bound. On the other hand, if there is a lot of underlying weakness, let's say a very negative advanced decline, or the NYC tick continually holding below zero, a lot of momentum on the downside. Let's say some intermarket weakness as well. The Russell is showing a lot of weakness. If there are all those negative signs, then we could even be setting up for a directional move going the other way. So at that point we can test 39, 36 half, yesterday's low, and potentially even lower, because right now the market is running on above average volume. So if that theme continues and this ends up being a failed breakout and we start breaking lower, then we need to be open to that possibility as well. But only if we actually break 50 half to 51 half, 46 quarter to 48 quarter, or if we get some pretty clear warning signs that this is turning into a failed breakout, but we don't want to necessarily predict this is going to be a failed breakout until we actually see some real signs behind it. For now, as long as ES is holding above 50 half to 51 half, 46 quarter, 48 quarter, buy side, is in control, and by default, the scenario is for upside continuation. So, the primary scenario for now is to look for a continuation up to 65 to 67, and in the event of a failed breakout and a break of 50 half to 51 half, 46 quarter, 48 quarter, then we could be looking at a move down to yesterday's low and potentially lower. And in the event that we do push lower, buyers can still be active at 26 half to 29, the open gap at 30, and the buyers can actually still even defend 41 half to 43 half, and we can just kind of end up with a more of a balanced two-sided session. So those are really the main scenarios heading into the open. So just keep a close eye on 50 half to 51 half. Ideally, you want to see the market holding above that area. If it doesn't, then we'll need to adjust our bias, make it more of a neutral bias. And if we break 46 quarter, 48 quarter, then that could shift even to a bearish bias. But overall, the market's still balanced within a range. 68 is essentially the top of the recent range, and 65, 67 is primary resistance on the day time frame. So those are our main thoughts heading into the open. Let's see if the buy side can maintain the overnight strength, and we'll take it from there.